And I get the disclaimer. Good morning, guys. It's Simon with Trade and Perform Coaching, doing the market preview for May 24th, end of the month, right? Let's get the disclaimer up here real quick. We'll go through it, then we'll move on. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, got that out of the way. So, first of all, really narrow overnight range, right? 94 3/4 to 99 1/4, not even 5 points, right? That means we're going to have mostly local traders handing off to one another in the process of trading. So the first thing we're going to ask is, can we get above or below prior day's trading range, right? Also know that it's going to be hard to get institutional traders to trade as we get on further and further into the week, right? Which means that the trading should get choppier and choppier, and that's good in some ways and bad in others. If we can get them to push down, it should be weak hands pushing to the downside, and it should be easy to get counter rotations. On the other hand, if they don't push down, right, or they only give us very small, tiny rotations, right, then it's going to be hard for us to get a position going. Negative 600 ticks with 2 or 3 points of rotation, right, just like we had into the 50-60 yesterday, are psychologically a challenge to take because you never know when the range is going to open up. But yesterday afternoon is a pretty good example of what can happen when we have locals in charge, right? So you can see after we came in, this is the initial push right here into the 50-60, right? And if you'll look at yesterday's profile, which I can pull up, is it still there? Okay, see how we had, let's widen this up. Okay, at the time that this is being formed, it was 96, which ended up being the day's volume point of control. But you can see it was very just widely, see when you build all this volume all in one little area, what we had was acceptance above the 23.96, right? And no one wanted to come back and explore prices below. So, but what happens as you get more and more acceptance in an area is there's less and less of a reason to take a stand one way or another, and therefore you end up with movements that look like this. So this was fine originally, right? This is the original move up. We don't have a lot of, so I want you to visualize, we don't have a lot of volume built up here, right? So when it pulls back into the 50-60, insert symbol, tick. And even though it's a small rotation, why do we know a small rotation is okay? The overnight range was, the day range, first of all, never penetrated below prior day's low, right? We came right into gap fill and right into the prior day's volume point of control and lifted. We broke IB high, right? This is the first 50-60 back from IB high, which we already know is a high odds trade. Even in a small rotation, we know that back from February that that's true, right? And then we got tick divergence right into that area, and it was right at the 23.96. This is their attempt. This is the attempt to push below the intraday volume point of control. Failure to do so. Push up, backside test, right? And then we push up. What this is, okay, but what this is this is all locals trading, right? Because we were unable, the only way we were going to get interest from outside money, right? So think about the distinction of whether you're inside money or if you're local money like we are. We're all day traders, right? The only way for me to get interest in putting money to work is if we get really above this 2400, right? I already know 2400 is psychological resistance. for the day. I know that there's not a lot of interest because look, the peak in tick came all the way at 10:30 in the morning. That was the most broad market interest that I had. So and then the peak in selling came all the way at the end of the day, and you'll see this push down below 600 right here. This is the first push at 600. This is the next push. Now, I want to make a distinction there. We look for that negative 600 tick when it's narrow, right? But look at that distinction. So there's not a lot to talk about in terms of range. We're opening inside of range right at the top from yesterday, right? So I want to show the distinction. This negative 600 tick right here comes on a rotation from 99 to 97. This is where it comes in your trading rules as to whether or not you have an acceptable rotation and what is acceptable and what is not, okay? So if you just said, oh, there's my 600 tick, I'm going to take it. Well, you didn't have to have a huge stop, but you better have some room to roll down at least to the bottom of the range. You didn't test anything here with this 600. But now we come to the very bottom, right? I'm going to draw this out. Even though this was the end of day. Why am I not getting this to work? There we go. Here's the very bottom. We come down and we one tick below. Now remember I said earlier in the day that in the summertime, if you can one tick below, I meant of the day, not of the afternoon location, but the net effect was the same. I said in summertime, if you can one tick or test the low late in the day, you tend to trap late sellers and then push back to the upside, right? So this 600 tick was on a 2-point rotation. This 600 tick, right, came from 99 down to 95. Not a huge difference, but it's at least 4 points. We one ticked below, unable to close lower on the lowest tick of the day, trap, push back to the upside, although granted, you had to wait till 3:15. I didn't expect or would not expect anyone to take that trade, but the trade setup is and was valid, is a good way to put that, right? So now this morning, we are opening right, so let's switch to this morning because I don't think we have to go through the checklist today. We don't have a significant gap, right? We're opening above, apparently right at the top or above range. So we want to look for potential open drive higher is on the list. But remember, everyone's in vacation mode. So the chances of having a true rip-roaring, straight-up market are, in my eyes, lower, right? On the other hand, I don't want to fade to new highs, right? So what I'm looking for is an attempted push lower, a push back down, and then preferably my first entry will be a move into this 23.96, right? And so my stop, this is important. If we close physically below these 2 points, right? So I always talk about perfect and not perfect. Perfect will be we'll come right into that volume point of control, right? And we will not close below Globex. So it's really 96 down to 94.75. We don't want to see these areas violated, and we want to see it quickly back above for a push back to 2400. Now, that's the aggressive trade. Okay, that's early in the morning, and that is the aggressive trade. What we'd really like to see is if we move a little bit further down, and we can get 10 down on the day, right? And we can get into this top of the open window. There's a mid of an open gap. There's Sunday's overnight volume point of control, which was untested, right? There's an open gap right behind it. And then there's a this white zone, which is 20 down. All of this area is very interesting. So how am I going to distinguish which I want to take? Well, I can tell you I want to take the mid of the open gap on a thin day. It's likely to get a response. And Sunday night's volume point of control is more of a point of interest than it is a strong area. But there's an HVN right at that open gap. I want this area, everything from that mid of the open gap down, right? So from this 83 to 78, I'm very focused on getting along. My bigger picture conjecture is if we can push down, that by Friday we want to get a push back up and they want to close above 2400 if they just don't do it this morning, right? So we're pushing up to 2400 right out of the gate. So remember, everyone who's going to be buying at the gate, we already know it's not institutions buying today, okay? So let the other traders make the mistake. My plan is to let the first half hour go. I'm not even going to take the zero tick because I know it's very thin, right? And then if we do open drive higher, I will look for the negative. Thank you, Siri.
I know it's very bright.
Yes, thank you, Siri. I don't need your help. I will let them make that mistake, right, of pushing down, give me a negative 600 tick. Give me 5-minute tick divergence, even on a small counter rotation, right? 5-minute tick divergence. I'm looking for that, right? And I'm looking if we can consolidate at lows for pushes and attempts to break lows, just like this, right? A low, we get a push down, unable to break the low. I'm looking for a force back up. This is what we get when we have thin trading and it's all locals. Pushes down, fail. Okay, so I'm looking for these pushes down, okay, and I'm looking for these pushes down on ticks, particularly new low tick and new high tick. And you'll notice also tick divergence on the top end worked. I want to reiterate, on the short side, if you're shorting new highs, you are willing to take the risk that they are going to continue to run you on a thin day. Not my style, okay? If you'll please move Globex high to 2450. And they'll probably just keep pushing right into the open, right? So, you know people are going to be looking for open drive higher. I'm hoping that they'll come back in and test Tuesday's volume point of control. That's the first place I'm willing to take a scalp, especially at this point now that that'll be a 4-point rotation. That's ridiculous. And I'm just going to sit tight. If you go back to February, which I've done repeatedly, we got repeated opportunities on pushes down. You didn't have to chase the open to get the trade, okay? And then we're also looking for break of IB high, and then the 50-60 back, preferably with a push, some kind of push or tick back in. Now, I have another suggestion, right? It was slow yesterday. It's probably going to be slow today. If you don't trade well in a slow market, give yourself permission in writing not to take a trade. I already gave myself permission not to take a trade today, right? And I can tell you that as most of y'all, if you'll look at what time the email was sent out, I fell asleep putting one of my children to sleep last night at about 7:30 in the evening. And I woke up at 12:30 and realized I had not done the charts. So I booked it back up to the office to get the charts out. Luckily, they were easy to do because of the narrow range. And then I went back home to sleep. So it's going to have to be pretty close to a 10 for me to take the trade today. That's in fairness to you, and that's in fairness to me. It's going to be in 10s, and I'm not going to be here past 11 o'clock. At 11 o'clock, I will take a nap, and then I'll see if anything sets up in the afternoon. But I don't feel desperate to take a trade. Was 40.50 the high? Yeah, it was. So I'm not going to try and grab the short. And I'd like the room to start thinking more and more along lines of where are institutions looking versus where are day traders looking, right? Institutions will be looking to defend this volume point of control. And the reason why there's a whole zone here from 97, by the way, all the way back down before I switch this back over, is because if you look, really it was from here, right, at 97. The back of that was 96, and really you could even argue 95 3/4, okay? It wasn't a clearly defined HVN. It was more of a volume point of control. It was a very wide volume point of control. Also, up here I want to point out, we've already taken out the naked volume point of control and tested the HVN here. So there's nothing really holding us back from hitting new highs except a potential lack of energy. So let me switch this over here real quick. Okay, this week will not be remembered if you don't press really hard. Also, so y'all are gonna have to watch NQ. I have found myself, despite the fact I'm saying I'm not gonna trade NQ, pouring a lot of energy into NQ. So I've taken NQ completely off of my table. Let me set up CL really quick while we go through the opening rotation here. Let's just switch this to a 15-minute really quick. Okay, first thing I want y'all to notice, we haven't broken our last swing low. This area right now, right here, that 50-50, has to be broken to be bearish. It's almost 100 ticks. That's the last major swing low. We're still above our last major swing high as well. You can see we've just come back in and backside tested it. There's nothing bearish about this chart. Doesn't mean that we can't roll over and come back and test 50-50, and yes, from 51.41 to 50-50 would be a nice trade, but it's not bearish, okay? And if it's not bearish on the 15-minute, it's not bearish on any other time frame. London high, London low. And it's likely to be chopped today, and it's inventory day, which means I have no trades on it anyways until after an hour, until inventory is done. There's the open. Here's London high. Here's London low. Now, someone asked me earlier, yesterday, the reason for the reference to London high, London low. You can have an impulse move within London high and London low. It is safer to get that impulse move outside of London high and London low as opposed to inside of London high, London low, because you're less likely to get a sharp reversal within range, okay? When you're inside of London high and London low, like yesterday was an impulse move with inside of London highs, London low. It moved so wide within that range, right? But most of the time, for visual reference, if you want an easy reference, don't get confused. Above or below London high and London low is where you want to be sitting. Also, what happens is people will confuse whether it's an impulse move or not, and the market will decide it's in balance. As you can see, bigger picture, right? This is purely balance, is all we're doing. So the first trade that would set up today would be a backside test of this 50-60 area right here, and I would shoot for the 60 if it were me. That's where it had this last resistance area. You see one breakdown, 1, 2, 3 attempts to break in, and that's what I would shoot for if I was looking for a balanced trade for a test back to London low. You are trading contra to the overall trend. Keep that in mind, right? So I would also look for a test of London low for a push back towards the 50-60 and potentially back to the high. It's been up a bunch, but again, it's a commodity. There's no rule that says it cannot keep going, right? So yesterday was very mechanical. I pointed that out in the trade review. If you didn't see it, I posted it on the stream, right? And I'm going to be doing more and more. So I'm keeping a separate chart that looks like this. Okay, very stripped down because I want to make sure that we are learning, and in that it's going to look like this. It's just going to have HVNs and volume points of control, right? Hopefully I didn't miss one here. But it will look like, okay, I'll have a reference to the top of the open window. The mid of the open gap will be gone. HVN and the open gap stays there. It's Friday's volume point of control. There's an HVN here as well. Let me make sure of that. $23.81. So this is a general HVN. There is no, so all of this would be gone, right? All of these things will be gone, and all I'm keeping track of is where's the volume points of control, where's the top of the open windows, at any rate, by the time I'm done today, I'll have this chart complete, and I'll start putting out a chart every night just of where the volume points of control are and where the HVNs are, okay? Mostly so that we can keep track of where we expect major inflection points, right? So if you look today, right, this has already been tested essentially. 23.92 essentially was yesterday. That was already got tested right here, right? So the next one down is 23.8150. That puts us right here, okay? with Sunday night's overnight volume point of control and the mid of the open gap, right? So the top of the window, everything else down here, okay, doesn't mean that there's not support resistance areas here. There clearly are, right? What it means, again, at Tuesday's volume point of control, you'll see they're going to try and step in at the overnight gap. If you're aggressive, right, that 23.96 is where I am looking. If I'm going to be aggressive, that is where I am looking to take a responsive trade, right? I don't want it closing beyond this point right in here. I just want it to come backside test and then come back and complete back to the upside, right? I will put a small chart on NQ up just so we can keep track of it for divergence purposes. But I need to stop trading NQ for a little while. And there we go. NQ. So look what happened, exactly like we described, right? Weak hands buying out of the gate, right? And now what are they doing? They're getting flushed back down to test that 57.10, right? So they're pushing overnight. Now they're coming back in. That's all that's happening right there. That is it. Okay. Let's see if we have anything else. Really, that's it. I will continue working on this chart, getting the volume points of control more and more open. But in the meantime, this is where I'm looking to take my first trade if they'll give me the opportunity to do that. In the meantime, that's open drive lower. You know what? It's not a 15-minute chart. It's 5 minutes. Let's fix that. Still not a pretty beginning to the day as far as that's an ugly chart. That's all there is to it. So at any rate, we'll see if they take it back the other way. I'm looking to get tagged in right here if they'll let me. And tick is obviously all positive. There's really no negative tick. All you have is NQ weak out of the gate. Weak being relative, right? You'll see the push that it made at the end of the day above 57.10. And I did not look on Econ. Let me check that out real quick, guys. Existing home sales, 9 a.m. Bank of England rate statement and the Canadian overnight rate. 10:30 crude oil inventories. 1 o'clock FOMC meeting minutes. Wow, well there you go. Just to add to the joy, we have meeting minutes at 1 o'clock. So keep that in mind. I generally do not trade that, FYI. And again, the reason this is slowing down is because that volume point of control area was so thick through here. I put it at the most conservative point I could. So see how everyone all the weak hands who grabbed right away, who thought, oh, we're going to open drive higher, and they got smoked, right? Gap fill, really volume point of control is what we want, if we can get it. That's an if. Yeah, I would say stop behind 1 point behind 94.75 if we can even get in there, Ryan. Usually with FOMC, they'll just grind it up. Notice the tick pushed and ES didn't push down at all. There, that was interesting. Okay, so I want to go through something that's really important concept here, right? The difference between the gap fill and the gap not filling, right, in this response, okay? So one of the areas I notice that people get frustrated in as a coach, right, is that we expect ourselves to know, oh, I should have known that the gap fill was going to work, right? So most of y'all have been in the room for a long time. I used to get frustrated by that, right? Because sometimes I would take the gap fill and it would blast through me, right? Down to where the volume point of control, which is exactly where my stop was, right? This is the difference between making a commitment to, I'm taking the highest odds locations on the trades versus, right, versus I am just trying to capture anything the market is willing to offer me, right? So I had this conversation with Daniel. Daniel, if you remember, we had this conversation a couple of days ago. And when we were in a coaching session, he goes, I think gap fills always pay me X amount of dollars. Okay. And I said, really? And so I had him do a homework assignment. And I was targeting 96, Ian. I was. I had a feeling that we might not get it, but I was still committed to the 96 level. And I had him go back and do the homework, and I'll encourage y'all to do the same thing. Go find all the open gaps from the prior day, specifically from day to day. The number of times they hold and the number of times they don't hold. It's about a 50-50 deal. okay? If you don't have a big stretch, or even when you do have a big stretch, it's still a 50-50 deal, and it's not a trade for me because of the ability for it to fail, right? What this tells me is every amateur trader knows that gap fill is supposed to be a good trade, right? Notice how it couldn't push behind it. Again, I'm going to start to make this distinction more and more. Where are institutions hiding and waiting? Where are the yeah, Brian, I answered your question earlier about the stop, right? I think I did. So where are the institutions hiding versus where are the locals trading? I want to trade with the institutions as much as I can, and I want to scalp around where the local traders are trading. Okay. Again, this goes back to mind over market thought process, which I'm going to be implementing the thought process more and more. This is the afternoon swing low from yesterday. This was tested multiple times. This should hold, right? I don't want to be forced in here and have to wait for the test back here. I'd rather take it at the test. So, in your trading, all you have to decide, just because I'm not taking it doesn't mean that you can't or should not take it, right? What it means, I got to kill something here. There you go. What it means is that you have to decide that you can live with the consequence of it not working. I am aiming for two specific goals. I want to increase my trade size as quickly as possible. The only way I can increase my trade size and my leverage is by being really accurate on where I'm taking my trades, right? So again, what I want to do is I want to find patterns like this where we're pushing down and can't break. Oh, I didn't mean to move that. Where was that? 94.25, I think. There we go. I want to get my trade locations as close to where I think I have a great chance of getting responsive buyers, right? I want to line myself up with trades that will give me as little problem as possible in terms of both ES and NQ. So I want to point something out here. I want to show something just for it to work, okay? Guys have been asking me about the 50 retrace. I would focus on the 62 because when all these stops get run, they're going to pop it right into the 62 retrace, and then I don't want to see it close behind the 62. By the way, I'm not taking this trade. Just FYI, I'm just showing it. I'm not trading. I'm only looking for momentum today for two reasons. First of all, I'm tired, okay? And trading the balance requires a stronger sense of discipline, okay? We are within a, strictly speaking, we've broken this downtrend here, okay? So they're pushing back in. Watch for a backside test on this. We haven't tested London high or London low, which concerns me because that means that either one of these equally can get tested, okay? But you can see they've come right to the 50. Understand, this is the same concept. The guy taking the 50 retrace there from London high to London low is the weakest, most nervous hand trading. He'll be the fastest to cover, right? And he's probably also the most leverage of all the traders in here, okay? So we're going to watch how this develops. I'm not taking it. I'm sorry. I've got to have, it's either got to set up perfectly for me today, and it's got to be an ES, or it's got to be a momentum trade on CL, and it's inventory day. I don't have any desire to. The worst feeling in the world is being down 20 or 30 ticks on inventory day and knowing there's not jack you can do about it, right? So I will stick around through inventories, by the way, to see if we can get a momentum set up from there. So my point is, my point is behind all of this is that you can decide, hey, I'm going to be in with a retail bunch and try. Remember, retail traders have about an 80% failure rate. So I want to push the room more and more to where's the highest win rate. And this is the reason why. I've had guys in here who've been struggling that I've been coaching, right? They're not losing money, but they're not making money. Meaning they can't get their win rate high enough and confidently enough that Brian specifically has pointed out very clearly for me, along with Bill. They're like, Simon, it's frustrating because you'll go through periods where if it's not the highest odds trade, If it's not the highest odds trade, you'll scalp your way through it. Well, that's because I can, right? I've been doing it for a long time, and I recognize the small nuance changes in the market overall, okay? But let me back it up. If we focus on what we think, like normally what would happen is the weak hand should open here. We should come down and test VPOC, right? Either VPOC holds, right, between here and Globex low, and then we come back and push through. What we should do is come down, test, then shake out all the weak hands, then come back up and push through and above the high, assuming that we don't get behind yesterday afternoon's low. If we get behind yesterday afternoon's low, the logical place is to come back. I don't even think Globex low is the logical place. I'd really like to see volume point of control hold, right? And then I'd like to see Tuesday's low. Also realize you need to go back through because we just went through February, right? There's plenty of data, guys, and I'm going to do this. I'm going to go back and review February since there's going to be nothing to do. I imagine after London close, it's really going to get slow. I'll go back and review a couple pieces on London. But even in that February period where we were grinding up, if you waited for 6-point rotations, right, which right now puts you at 23.94 to 23.91, you got those rotations. It may have taken all day to get them, but they paid, okay? The reason why I say this is because it's amateur hour in the market right now. Every institutional trader, the longer they see this slow grind right here, like see this NQ right here? Look how NQ is trading. It tells you everything you need to know. We've gapped up. We've driven down. We've come back up. They tried to break the high. Right? They tried to break the high. They failed. And look, everyone bailed all at once. Where do we finish being poorly auctioned? All the way back over here at 56.99. That's where we're no longer poorly auctioned, right? But one bar wiped out this entire move right here. That also tells you that sellers are much quicker than buyers. It also tells you the other piece is people are nervous, right? So maybe that was econ, that was a response of selling, and we get back above. But right now we have to get above 57.17, and you can see that 57.10 is the backside test of yesterday's morning's high, and we pushed right into it. So we'll see what they do, but this is what you end up dealing with in NQ and what you end up dealing with in ES. And remember, we want the divergence to work the other way. Ron's point was yesterday when he went long was we had a one. Let me see if I remember Ron correctly. One tick of the low, divergence. ES hit a new low. NQ did not hit a new low, right? And we had a. I believe we had a divergence as well, a local divergence. Ron, you'll have to remind me if I was wrong about that. So, anyways, let's just sit patient and see if the market will unwind a little bit. We've got oil inventories coming up, and I'm going to refill my coffee, and I know exactly what I'm looking for, and I don't want to get involved in being chopped, and I'm totally all right without taking a trade today. I can't reiterate how important that is. And then the other thing is, so I learn a lot from the guys that I'm coaching, and someone I was coaching yesterday told me they had that their worst month in a long time was in February. And then I asked them, well, what went wrong? And they couldn't tell me, which is all right, right? Okay, that's not the worst thing. Everyone wants to forget about their bad days. But you've got to learn what went wrong. Like, were the losses clustered on, were you shorting and the market kept driving up? That was my issue in February, right? Were you taking small rotations and then getting stopped? Were your stops too tight? Your bad days contain more profitable information about how to be a better trader in the future than your good days do, okay? And I would strongly recommend you keep a journal and you, on a daily basis, you write down what went wrong, what went right, know what went wrong, right? And look for patterns in your trading when they're going bad. I can tell you my bad pattern trading has been, I've paid too much attention to NQ over the last couple of days, and I've lost attention on ES. So this is as fancy a chart as I'm going to put on NQ right now. I don't have the momentum chart up. I don't have anything going there, nothing at all. I'm just not interested in, and the reason for that is it's too whippy, it's too fast, right? and you have a tendency to want, because it can rip anywhere from 10 to 20 points, you have a tendency to want to put in a tight stop, and the variance on NQ is much wider than the variance on ES, meaning NQ can go from one day from a 10-point rotation being the solid rotation to the following day being 30 points, to the next being 10 points. If you have a hard time keeping up in ES, it's even harder in NQ, right? So, and I don't have solid divergences to see between NQ and ES, but NQ is leading us, as you can see, to the downside right now. So again, that test into the volume point of control, right? The negatives are small rotation, right? The positives are, that's where it should come back and backside and check up after we shake all these people out. But it's FOMC day. You're just going to have to make a decision as to how you want to handle that. Yeah, I agree. So, and Ian's sharing his favorite quote, which is, "There are no pacts between lion and man." Seems appropriate for the Fed day. That's from the film Troy. Interesting. So you see how we're testing right into, remember how that whole volume area, this whole thing was thick, right? I would prefer, so I've chosen the most conservative point, the furthest point back, to be the point where I want to grab it, right? And I really don't want to see, what I really want is it boink, doink, doink in, right? But there's a possibility we come back to Globex low to test first. And notice all the weak hands who came in right at the open, they're all bailing right now, right? Even though the tick isn't weak, right? They're having to come out of that trade because most retail traders have 2-point stops or less. My Skype is up. And again, the bigger picture, the higher odds trade is going to be a 7 to 10 point rotation with 5-minute tick divergence. Know what you're looking for. Know what you can live with. Okay, you're probably not going to get decent tick divergence into 23.96. Okay. See that? Damn, I was afraid of that. But again, 2-point rotations, right? Anyways, I'm going to go fill up my coffee. I'll be right back, guys. But this pattern, okay, but don't forget, this pattern is valid. And this should, whether we test the actual volume point of control, we just come into this thick area, we should push to a new high from here, okay? Getting behind here would change that scenario. Closing behind this area would change that scenario, okay? Resistance right now is the bottom of this 5-minute bar, okay? And the breakout would be a close above this 5 and a push, in which case I would look for, if we get above it, a negative 600 tick push down into this 2450 and into the top 5-minute bar for a response continued back up. That's plan B. If we get above here and we don't get a test in, it would be for negative ticks, negative pushes in for continuation higher. Okay, so I'm just sitting tight for right now. Again, guys, I expect this slow grind the majority of the day. It should resolve to the upside, but yeah. Right back again, guys. So now we can write down, right, when we're going through, when we have a big thick profile like that, right? We have a big thick profile like this, even at the volume point of control. So Tom, I was choosing the most conservative point location to take a trade, which is at 96. That's what I'm shooting for, which was yesterday's volume point of control. The difficulty here is that we have no rotation, so the whole rotation here is 2 3/4 points, right? So one of my basic premises to get enough stretch where you've actually exhausted somebody else, which is impossible on a 2.5 point stretch. But the other problem is, Randy, you were asking yesterday, the volume point of control is right here at 96, okay? But the HVN is right here at 96 3/4. See how they're different? Okay, because one was based on time, one's based on price. Okay, and this whole area is so thick. Remember, volume is going to get defended every time. So the risk I run, which isn't really a risk because I could care less about missing 2-point rotations, right? But the risk I run is that that they won't push it to 96 and I won't get my trade. But even if I do get my trade right, I don't care. It's 2 points, guys. But the point is, you were asking how the volume point of control can be different than the HVN if it's on a TPO or a time-based profile, and that's how you would get that's how you get an HVN from the time profile that's different from the volume point of control from a volume profile. Does that make sense? Or does anyone have any questions about that? Because that's an excellent demonstration while nothing's going on to learn from that. Negative 200 tick. NQ. Cheese grinder. Are we pushing to a negative 600 tick? So I am looking for a responsive buy at 96. I'll have a stop 1 point below 94 1/4. Okay, that's my trade plan. Okay, I don't know that I'll get filled, but that's what I'm shooting for. If they fill me, that's great. If not, I don't plan to spend a lot of time worrying about it on a day like today. Damn, that's unfortunate. So plan B would be an extension above and to see if we can get a negative 600 tick back into the backside of this area if they won't give it to us here. Understand above 2400, and I got this from Ron. Are you in the room this morning? I don't know if you're already on vacation or not. Yeah, but I kind of like what you said yesterday, Ron, where if we get acceptance above 2400 and we consolidate, it would force new money in to push up. I don't just kind of like it, I do like it. NQ pushing again. I agree. I would have liked personally to got hit in 96 and scaled 98, but market doesn't want to cooperate with me this morning. I knew that was a danger when we had that thick, widely distributed HVN. Volume's really low today, by the way, guys. Again, notice, so things that don't matter in a 2-point range but are big deals in a wider range, big negative tick, inability to push below the low, right? Sign. The problem here is when you can't get plus 600 or minus 600 is you're open to a whoosh one way or the other. I'll be right back, guys. Looks like I'm not in danger of my 96 anytime soon. Oil inventories in 2 minutes, guys. Let's Let's see what fun they have there. So see how they come right to the 62 retrace here? So if you limited right in front of that 62, you were able to get 10 ticks. God bless you if you did it 5 minutes before the oil inventories, but this should be fun. I want to see the CL volume profile. I would have support at 5092 to 5067. And resistance above all the way up to 5223 to 5245, followed by 5303 to 5337. So there's the push up to London high. Can't get there yet, but give it some time. That's about as unimpressive a response to the numbers I've seen in a long time. Normally I would short that with a stop right above, like at 51.89. And it should have zipped through there. I'm not taking that trade, by the way. I'm just saying, if I were a younger man, with less knowledge, that is not the kind of blast you would expect. Of course, they're creeping it. Back to 2400 on ES. That was a good plan. It just didn't get, I mean, a 2-point rotation. I'm not going to punish myself for not taking a 2-point rotation. So what's the auction trying to do, right? Think about what are the players trying to do here, right? Auction's trying to push up. They're having a very hard time getting past 51.88, right? They are trying to respond to the upside, right? So far they've done a poor job doing that. Right now, they haven't sold either, but they sure are having a hard time getting above that. That would indicate, right, that if they don't come up with some strength pretty soon, that all these people doing this buying up here are going to have to turn seller, right? That would be the indication that that would give. This is learning the auction process in real time, right? You would think if we were really strong, we would have just skyrocketed through that 51.88. The fact that we crawled up there, it's usually a pretty big move right after inventory numbers, right? So they still may do it, but my general sense is that I would want to short that with a tight stop, like literally 1 penny above. See if they can get their act together afterwards. It may just be holiday trading. They're struggling with that. And the longer it sits there, the longer those guys are going to go, how long should I stick around for? And they're going to start tripping over themselves to get out of it. Well, I think that tells you all you need to know about today's market right there. That was a 30 tick oil inventory move. So we'll keep an eye on it like this. There we go. See that? Now everyone's going, uh-oh. Right? So picture, weak hands buying, weak hands buying, weak hands buying. They're all coming out now. Now, what do you need if you're a bear, right? You got to get it below 51.20. So the way I recognize that, right, is when it doesn't look like what it normally looks like, you know that there's a problem, right? I'm just too tired to trade CL today. I don't want to make a trading error. And believe me, there's a difference between when I put on the position, I'm very much more focused on my position than I am describing the price action. Okay, so see that? Weak hands, bail me out. I'm in trouble now. Isn't that cool? And you can learn that for every single market that you do. You can learn what it should look like and then recognize when it doesn't look like that and be able to take advantage of it. So that was that last little jaunt right there was everyone going, oh my gosh. And if it were me, I'd have my stop here and I would not touch that trade. I'd go either come out and take me or break it down. We've been up so many days in a row. I'm sorry I'm tired because I'd be swinging the crap out of that. Thanks. Ralph is pointing out, thank you, Ralph, 23.95.75 is yesterday's RTH mid. Did that help? Does that help when I describe that, even if you don't trade CL, right? Do you see how you can read? See how you can read what you should be getting, right? That it should have been a blast, right? When they couldn't get above the high, it was, in my opinion, it's worth the 5 or 10 ticks you would have gotten. Plus, let's say you would have gotten run by 3 ticks. Like that should have been an immediate push. There's no way I would let go of that short right now. If they stop me, fine. But that is not how that should have worked. And when I say if they stop me, again, I want to be clear. I don't have anything on. I wish I did now, but I didn't want to deal with the stress of having to deal with the stops. So once we get above 2400, right? Remember the current RTH high is right above it. We're going to have to demonstrate that we can't get back below 2400. What would demonstrate that? Would be a big, strong negative tick. Nice job, Ron. I'm starting to, you must have got better sleep than I did, because great job. It's, what do we have coming up, guys? I'm tired. Memorial Day or Labor Day weekend. Market's closed Monday, and it's going to be super slow on Friday. I always get it backwards. I believe it's Memorial Day coming up. Anyone want to help me with which holiday we have coming up? I don't even know. It's Memorial Day, I think. Memorial Day. I'm tying myself with coffee this morning. That was a nice trade, Ron. Tip of the hat. What I really want is a push down towards 90 or 85 or 80 for a slingshot back to 2400. But no one seems inclined to care what I want. Guys, day may be over. Hate to say that, but So guys, now we've consolidated above that volume point of control. Okay, so it adds risk to this. So remember, this move has to come early to work. It's push down, then to push back to new highs. We have failed to push to new highs, and now we'd just be retesting the low. Okay, so as the day goes on, the context changes, right? So we either need to break RTH high and come back for a 50-60, or at this point, the volume point of control, I don't know if it holds at this point anymore. Like what I wanted was just like yesterday, zip in, zip out. So I'm not getting that. Doesn't look perfect. And tick is completely and totally, utterly neutral, right? So I would suggest waiting for a negative 600 tick to get your entry, right? And a better than a 2-point rotation. I can't believe we're discussing that, but that's what I would say. So let's see if we can get it to move a little bit. That's true. Ron's pointing out both GloveX high and IB stat are both in play. Neither one of them have been hit. We haven't hit GloveX low, GloveX high, and we haven't broken IB high or IB low. That tells you a lot about what's going on. And man, NQ is a blender from 57.10 to 57.18. Wow. If you're a chaser, you've been just screwed today. wanted to see what's going on with that. Ron, that trade's gonna. If you can get below London low, you've got a freaking runner on your hands, brother. That's a good setup. On top of everything else, when I got home at 2 a.m., my one of my daughters was crying, and I had to hold her to put her back to sleep, and wow. Oh, you're on. So if you're asking me, I'd be taking the whole shot on that thing that it's not going to break London high and shoot for the breakdown below London low. That's me. So I would scale till that stop brought me to zero. Just with that response, we should have broken. That's what I'm reading off of. So I wouldn't bring it to break even. But if you have to bring it to break even at this point, that second push up couldn't to get back to 5180. I might bring it back to 5180, but for me, I would just leave it above London high, and if it's a whole shot, because if it gets below 5120, look how far you have to bring it back. Like you should come back at least into this 5109 to 5092, and if you can get below that, man, you've got a lot right to here. 49.31. Not that it would have to completely fall apart, but I mean, this is a good structure right here. Look at that. 4 days of consolidation. That's the point. That's the scene of the crime right there at 49.99, and that's not that far away. So it's just, to me, I could be completely wrong, but that's where I take my whole shot and just cross my fingers. I don't know if there's enough energy to make it happen. I know that's not a very satisfying answer, because then you're screwed if you do and you're screwed if you don't. So the answer is, if you can't tolerate the stop, bring it to break even and hope it doesn't come back, is the answer to that question. But I would leave it right up here. That's me. No, sure didn't. She got very agitated by it, actually, and said she didn't want to hear any more about cryptocurrencies, Ian. Just to be clear, I've pulled my 86. I'll watch it based on past price action. 96, sorry. 96. All three markets look identical. That's pretty funny. That doesn't happen too often. See that wedge that's forming in NQ? I did pull, Brian, I did pull the 96, brother. And I'm about to pull myself here in a second. If this takes too long, I'm just going to drag myself down to Starbucks. It's pretty outside. It's about 78 degrees, sunny. Do y'all see that breakout in CL? How cool that was? Look at that. All that buying, all that resistance, and then as soon as it broke, man, look, these are all buyers. These are all sellers in here trying to hold resistance. And then bam. Look at that. I'm surprised we can't get through this over here. Like this was almost completely unauctioned. Right? So see how we're running into resistance right at the bottom of that unauctioned area? Right? But if we can get into it, I would have thought we would. That's why, Ron, I was surprised when we pushed up. And I said, hey, we should have just flipped through that. And we didn't, which makes me think we can come back to retest the scene of the crime down here. Right? And then look at that. Look at that HVN right there. That is pretty. At 49.25. But instead we're doing nothing. And look now on CL, Ron, if you can hold it below there, look at all the acceptance that's built here. See that? If you can get it below that acceptance, right? If you can hold it inside here and get below that acceptance, so you got a low volume node-ish there. You've got an undefined HVN. There's your HVNs, right? But they're really poorly defined. And then this is your next area where you have a clearly defined HVN, low volume node, a double distribution right in there, and then below. So those should be your areas of pauses and counter trades. And then your ultimate destination should be a revisit to this area right down here where we had the breakout to the upside, right, for a push. So 50, and if it gets really sloppy, 49.50. But a lot has to happen for that to occur. Meaning, you actually have to have a participant who wants to buy or sell. Sure, you flying into Dallas today, Brian? I'm all about going downtown to meet you for lunch, man. There's a great barbecue place right in downtown Dallas. I'll pick you up. I'm telling you, if you can get that to push, Ron, you've got a freaking lottery ticket on your hands. But they got to push soon or the buyers are going to come back. You got to break that 51.20. That's the smallest response I've seen from a crude oil in months. That's going back to February type response. Ryan, make sure Simon pays. Yeah, Brian, make sure I pay, brother. Ron, you still in it? You can get them below that 51.20. Send 1 million contracts at the market to sell. That'll do it. Test the London low. I'm no longer lined up at 96. I'll judge it based on the price action, guys. I'm looking for 5-minute tick divergence specifically at this point. So I'm watching closely for it. Here, we'll narrow this down a little bit. This was a big lesson, guys. I would have that pounded into my head. When you don't get what you expect the opposite. They should have blasted that. That's already almost $500 a contract, isn't it, Ron? $400 a contract? And that's a good day. Now I feel stupid for not having taken the trade. Ugh. Sleep. And NQ has just been a, what do they call those? Vitamix blender today. I know because it's a, I'm sure it does. Let me look. I know why it does too. Is that a Sierra? I'm getting Sierra. Look at that. Again, and I got to tell you, I've been using trade stations for a long time, brother, and they work. Man, your numbers are small. So what's that first 50-70 is what you have as first support? What did I have? I have, and yours looks way different. And that is set for all data, including Asia, correct? That's 24/7. Why is it so far off? Oh, you know why? That's a true volume profile, right? That is not a TPO, correct? Okay, mine's a TPO. That's why they look so different. Interesting because, you know, Dalton uses TPO completely. You know that, right? So what I'd be interested in seeing, once I get my CR charts up and running, which I'll work on this afternoon, what I'd be interested in seeing is the response points from the HVN on a volume profile versus the response points from the TPO HVNs. Well, an easy way to see that is from The Weiss wave would show you that pretty nicely. Ah, true. But it would work for NYSE as well, actually. I can create a Weiss wave with an NYSE chart. Let's see if I can do it. Open Weiss wave. Weiss. Okay, so what would he use? SPY maybe? Yeah, I agree. So maybe he would use the spiders. But that would be S&P 500. What would he use for the whole broad market? And that's a spider chart on a Weiss wave, right? And look at the volume pushes up, right? There's the exhaustion. But then look at the pushes down, and you can't even get back to the point of breakout, right there. See that? You can't even get back to the point of breakout. Very interesting. And those are pretty big, heavy pushes, right? So now, the other thing you'll notice is look how, as we're testing the high again, look at the volume is not nearly as strong. So you can see that over here as well. So you get a push in volume, a push to a new high. Now notice subsequent pushes, look at the volume drops off and subsequent pushes back to the highs, right? So now we're getting a push back to the high. Volume's going to have to kick in to really get another leg up. Otherwise, we're going to go through distribution up here. But that's just on the spiders. It's not on the broader market. Bill, any idea what we could use for a measure of the broader market? Oh, got it. Okay. Yeah, I don't either. Well, either way, I tend to do pretty good without getting all the additional information. I thought you had them on CL for a minute. They may make you work all day for that, Ron. So I'm done in 20 minutes. If we don't do anything by London, I'm just going to go enjoy my day. I'll be back. I have a coaching session this afternoon, but I agree. This does not work. Oh yeah, Fed minutes. We should grind up into Fed minutes, frankly. That's what usually happens, like that 10 to 12 will push up into the Fed minutes. Man, you're busting me on me pretty hard on that Ethereum, but I gotta tell you, man, I'm freaking killing it on that freaking cryptocurrency. I ended up selling a lot of it yesterday, but I am regretting it as we speak that I sold a freaking penny. I mean, it's to 193.58 today, right now. I bought that thing freaking 2 weeks ago. I was buying it at 91.86. That is ridiculous. I'm still selling it just because Bitcoin's the only thing I'm committed to holding, but Bitcoin's up to 2,400. It's up $1,000 since I mentioned it first in the room. New guys, I'm not telling anyone to trade it, but I've been buying it. And Litecoin, which is the most ridiculous POS that I have, I bought it at 23. Freaking Thursday, I paid $23 for it. It's at $31.90. I mean, that's freaking $19.99 trading right there, guys. You've got to love that. I mean, I haven't had returns like this in a freaking decade. In a week. It's like being a penny stock operator. But yeah, I am selling up here so I can buy when it does finally crash. Hopefully I'm not buying back at higher prices. I'm not buying it here. I'm selling it. So I'm selling it, and then when the bad news comes out, whatever it is, hopefully they crash it by $500 or $600 or $700, and I'll buy back more of it. But I'm holding my core on Bitcoin. It looks like you're about to get paid on CL, brother. If you can get that thing to break, I'm telling you, these guys, that was a freaking important ass bar right there. That bar, I'm going to go, when I write in my journal tonight, I'm going to go, A, get your proper sleep, get your charts done on time. The problem is my daughter has a ton of end of week activities and she had performances last night, but that's an excuse. I should have been awake for that. I mean, that was a gift. And so you should commit that to memory. When you see that and that's the response you get, up or down, after what should be a large response, yeah. Wow, I'm not even going to repeat that, Brian, but that's very funny. That, by the way, this push right here, God, I missed it. I get so asleep. Lowest tick of the day, couldn't break the swing low. Again, 2-point rotation, guys, so I'm just pointing out the details. I'm not going to trade a 2-point rotation. It's just not in me. But that setup is very important. I don't have the patience to wait. Yeah, that's true. I agree. Let it break. Let's see if we can get some sellers there. The problem is I'm starting to get tired. Not a problem, but damn, I mean, I'm pumping coffee into me. Yes, I am, Ron. Thank you. Although I've switched off and I use my own, I use a different coffee brand now from Colombia. But yeah, it's cheaper than $4. I can tell you that. I guarantee I spend less on my coffee than most people who drink at Starbucks every day. I thought short. Okay, I can answer that question actually. So Brian, see up ahead on. Let me get rid of this chart. Okay, so Brian asked why I thought short. Okay, so when I look at CL to the left, see this huge area right here that's totally unauctioned, right? There's no resistance in that area. See that? We initially rejected yesterday out of that area, right here. Okay? On oil inventories, it should have been mega easy to blast to at least right here, if not up here. Right? That's 72. That's 51.72 to 52.90. That's 100. That would have been less than 200 ticks a move, which is very doable on oil inventory. Oil inventory came out, and the response was to move from, when oil inventories came out, we went from 51.52 to 51.80. What's the normal response? Is like we almost always move immediately 50, 60, 70 ticks like in a second. And we didn't. We just started climbing up there, and look at the 1 minute. Like there's just no buying. Look at this. Here, 2 minute chart. So there was the initial push, right? That didn't even do it justice here. That's how slow it was. Let's do this, 30 seconds. So the whole move came in 30 seconds, and that was it. And then we spent like 2 minutes trying to push up, and we couldn't, right? And so go back and look at, old Wednesdays on oil inventory. You'll usually see this bar is like 70 or 80 ticks. Like it's slam down, slam up, or some version of it, but it isn't this right here, this slow grind thing. That ain't normal. So as soon as I saw that, and we can't even test London high, I immediately think, so we were right here when I said it, at 51.75, that's where Ron is short from, and I said, hey, there's London high at 51.88. I put my stop, I literally said I put my stop 1 penny behind to find out, right? That's like, what, $100 a contract. And at any rate, I thought that was a very worthwhile, that's why I thought short. Now the next thing that has to happen is we have to get below London low, and that may not happen either. We may not just have enough energy to make a move, but we should have been able to auction through that relatively easily. The fact that we couldn't, right, now leads me to believe that we'll come back. And so when you don't get what you expect the opposite. So everyone who was buying here expected us to break London high. That makes sense to you, right, Brian? No, the reason I think short is because, look, if you were buying here, put yourself in the mind of your opponent. If you were buying up here, what did you expect to happen? Oh, okay. So, but even without that, what did you expect to happen here when we made this push up, right? If you were a trader, no, I'm talking to you, Brian. I'm just saying, even without the volume profile, right? Even without the volume profile, if you're a trader and you see this bar, right? And this bar is all green right here. Got it. Okay. So what I think is that's when I'm watching price action and I'm going, oh, I expect it to go whoosh. And so when it doesn't give me that whoosh, I'm like, oh, there's a problem. And it should have given it to me. And so my guess is that they're going to trap the weakest hands up here. And then all those guys are going to come out. So first the weakest hands came out right here, right? That's what that was. All these guys that bought here, that was this bar right here. And then this is everyone else realizing, oh, we're not pushing up. And then this is weak hands trying to buy London low for a bounce. I'm not sure that's the first test of London low. So this is first test of London low. That's a reasonable trade there, right? It's understandable. But even without that, I would be concerned about that trade if I were long. Like, I might not dump until we close below London low if I were long, but if they can get it below there, yeah, I would dump. You got to be thinking profit taking at some point. And so we are coming up on London close, guys. I'm going to stop this recording. There's nothing to point out. I'm going to try and edit out what was important there.